exciting webinar that we have in store for you. My name is Robin Jenga, and at Wild International, I serve as the head of marketing and partnerships. And just before we begin this session, I'd just like to quickly walk you through what Wild International does, and more importantly, why do we hold these kind of sessions? So Wild International, for those of you who may not be familiar with us, we are a business consulting firm, and we specialize in the development and execution of strategy services for SMEs. We've been doing that quite successfully for SMEs for the last 20 years. Yes, we have been developing developing strategies for SMEs across all sectors. We are also members of an organization called the Sandbox, that is spelled SNDBX, and I'm sure you can see the logo on your screen, the top right logo in black, which is a collection of over 35 experts who are geared towards providing support to entrepreneurs. And basically, the concept behind the Sandbox is the same way we say it takes a village to raise a child, is the same way we believe it takes a village to raise an entrepreneur. So if you walk into the Sandbox today, if you have an issue with, say, your legal, if you have an issue, say, with your marketing, you'll find an expert who's ready and willing to support you. At the Sandbox, Wild International is the strategy expert. And as I mentioned before, we have been successfully supporting SMEs with their strategies for quite some time. Above and beyond that, we do have a lot of capacity building programs that we run that are tailored towards supporting entrepreneurs. For example, we have one that we're running in partnership with Meta that is geared towards providing support to entrepreneurs on how to grow their businesses digitally. We have another one that we are running in partnership with Aceli Africa, which is geared towards growing or supporting agribusinesses within the East African region. So that's Tanzania, Uganda, Kenya, Rwanda. We also have another one that we're running in partnership with WRI, World Resource Institute, that is geared towards providing support to entrepreneurs within the Rift Valley and other great landscapes within Africa. We have another one that we're running with Social Business, and that one is geared towards providing support to businesses that have a social cause. And finally, we have another one that we're running with EBs, with Brighter Monday, called EBs kwa Vijana. And that one is also geared towards providing the youth with opportunities or the knowledge to know how to scale their businesses across various e-commerce platforms. Above and beyond that, we do have a very strong component of access to finance, where we work with various development partners to provide various financing solutions to entrepreneurs that actually suit them and actually work for them. And then finally, we do have a strong component of business coaching. We are one of the few organizations that are very, very empathetic towards the struggles of an entrepreneur. If you're an entrepreneur joining us, you know it's not an easy journey. As such, one of the things that we firmly believe in as an organization is working with entrepreneurs throughout the entire course of the entrepreneurship journey. So we do have a very strong component of business coaching. And I say all this to say that we are very, very passionate about supporting entrepreneurs, which is why we also developed this series. So this webinar is part of an ongoing monthly series whereby we hold or discuss certain important topics that we believe are important to entrepreneurs or entrepreneurs are suffering from on a month-to-month basis. So previously, we've had sessions around succession planning. We've had sessions around human resource. If you're an entrepreneur, how do you recruit top talent and actually retain top talent? We have had sessions around risk management. A lot of SMEs that operate in Kenya and even Africa as a whole are not usually familiar with the type of risks that are out there for them, which could actually end their business tomorrow. We've also had one around, non-financial matters such as mental health and entrepreneurship. As I previously just mentioned, the journey of entrepreneurship is not an easy one. And a lot of entrepreneurs really need help and support to just figure out how to navigate that. So as I mentioned, this is part of an ongoing series. If this is your first time here, karibu sana. You're in store for a very, very amazing session. If you have previously joined our other sessions, karibu once again, and we look forward to seeing you in the future, let me say, sessions that we'll be having under this series. I think with that being said, let me hand it over back to our very capable moderator. Asanteni sana once again for joining us, and all the best. Back to you, Njeri.
Thank you. Thank you very much, Robert. So now people get to know who is the host. Wild, we are the ones who are welcoming you into this conversation about money, and we are discussing this with our partners. So I'd like us to just get to know who is going to be speaking to us about this money conversation. Introducing our panelists. So I'd like to begin with the first panelist, and that is, you can roll the screen, Mr. Isaac Shiundu, who is a Senior Associate Corporate Finance, Raising Capital. He will be speaking to us about just how do we get to raise funds. So we now will also get to know Stephanie. Stephanie Ngoko, the CEO and founder of Upscale Consulting, and it is important to know that Stephanie is one of our experts here at Sandbox, working together with us. Then we have Peter Fry, co-founder and executive director, KUA Ventures. When we talk about grants, impact investing, what do we mean by that? He'll be speaking to us about that. And then we have Ruben Kimani, Managing Director, Edenbridge Capital. And so I'd like to say a warm welcome to our speakers today. So we'll get right into it and begin our conversations. Now, one of the things during this season is about Olympics. And one of the curious things about the human body is just how a gymnast like Simone Biles can really jump up 12 feet. Now, it is interesting to note that that's about 3 times her height. I don't know whether that's what we usually look for when we're looking, when we're trying to look at our turnovers. But just to begin us off, our guest speakers today, what is that one quality you believe that every entrepreneur should have when seeking financing, and why? Should I start with you, Isaac?
Yes, Jerry, thank you so much. So, hi, my fellow panelists. Hi, the listeners. My name is Isaac Shiundu, as you've been told, from Raising Capital. At Raising Capital, we help businesses capital raise, and we have a geographical presence in Eastern Africa. So back to the question, the main skill or quality that an entrepreneur should have is basically a deep knowledge and understanding of the business in which they are in, and also the knowledge of the market in which they are in. So that, to me, is the fundamental quality that if you consider yourself an entrepreneur, this is the one quality that you should have.
Thank you, Isaac. Peter, is there any other additional qualities you'd like to add?
Thanks, and Jerry. Nice to meet you all. My name is Peter from KUA Ventures, and excited to be here this afternoon. For us at KUA, I mean, there's so many different traits, right? They're so critical. An entrepreneur's journey is a lot of work, but one thing that we really look at when we're kind of going through our due diligence and screening prospective businesses, one is character, you know, because as an investor, we're really trying to build a partnership and journey with someone. And, you know, there's going to be a lot of challenges in the future. And so, of course, like the journey is never straightforward. So kind of having that kind of strength of character where there's just honesty, transparency is just really critical for us, because I think that's when, you know, when the challenges come up in the future, you know, you're going to be on the same team. But it also indicates, I think, you know, when you're an entrepreneur and you feel you've got the weight of the world on your shoulders, you know, there's an aspect of actually helping, like, will people follow you? Will people trust you? And will you be able to build a team? And so for us, having that kind of the strength of honest, credible character is just a critical component that we look for.
Great, thank you. Ruben, what is that thing you look for before you decide you're going to give someone money?
Thanks. Good morning, everyone. As introduced, I'm Ruben Kimani, the Managing Director of Edenbridge Capital Limited. Edenbridge Capital Limited, we are a non-bank financial institution offering financing, insurance, guarantees to MSMEs, micro, small, and medium enterprises. And this is a very interesting question, being an entrepreneur myself. And as my co-panelist Isaac alluded earlier, for any entrepreneur, the first thing we check: do you understand your business? Do you understand your business environment? And this comes around even in terms of competitor analysis and also your markets, and more important, also your finance, your funding need. So are you looking for funding to maybe for capital operation, or maybe to just make add on to your stock? So the funding need is really critical, and this helps us to avoid scenarios where there's diversion of funds, in that you're borrowing for one need, then you divert to another need. Thank you.
Thank you, Ruben. Stephanie, what should an entrepreneur be looking for?
Good morning, everyone. My name is Stephanie Nguku, the founder and CEO at Upscale Consulting. So I'm an investor readiness expert, and what we are doing at Upscale is typically helping entrepreneurs to be able to access funding, but through investor readiness. The challenge we encounter when we first started our operations is that it seems just simply that just possible that entrepreneurs can get funding, but we found bigger challenges which have to be addressed before the funding can actually happen. And in most cases, there is a sort of mismatch between themselves and the funders. And so we work with them in helping them to address those gaps, these which need to be addressed so that they can attract funding. So typically that's what investor readiness is all about, the investor readiness expert at the Sandbox. And to respond to the question about the quality, we look at entrepreneurs, because we also do introductions to with funders for entrepreneurs that we feel are ready for investment. And if I can highlight some of the areas that we look at around your understanding of the business. Sometimes, we have this idea, but we need to be very aligned with the market. And this has to do with a very good understanding of the industry that we are operating, and pretty how much our offering is market fit, and it's actually been able to address a problem in the market, and the ability that it can actually be able to scale. And that means, of course, bigger business and a bigger return for and sustainability, for those who are investing in that venture. So very important to understand the market, that understanding of the market. And then again, also the numbers. This usually is a challenge with most entrepreneurs, being able to crack the numbers, because that is the heart of the matter. In as much as we are running the businesses, then how does that look like in terms of the revenues and ability to grow them, the profitability and the like. And of course, the formality. Most of the businesses start from an informal sort of a bit, but as we progress and you want to get serious, and especially you want to bring on board external funders, you need to demonstrate some sort of structure in how you are running the enterprise. So just a few of those. There can be more, but for us, those are the first highlights that we will look at. Thank you, and looking forward to the session.
Great. Thank you. Thank you very much, panelists. Ladies and gentlemen, you've seen me scribbling notes, so I'm hoping you are doing the same, because we are in for a treat. Now, if you do have any questions, kindly put them in the question and answer QA button you can see there below. We will collate them and we will get the panelists to answer us. Today is all about money. And so be sure to ask us as many questions as possible. So Isaac, back to you. You're well versed with transaction advisory, capital raising, independent business reviews, financial due diligence, and business valuations, among others, including financial modeling. So maybe just to ask you, what was your driving force, or what is it that propelled you to come into this industry?
All right, thank you, Jerry. So my drive towards the capital raising line of services was basically informed by my need to actively participate in facilitating businesses in raising capital, and also advising them through the process of raising capital. So this was mainly because of having understood that most business owners do not necessarily have the knowledge or the financial acumen that is needed to navigate through these processes. Secondly, it is because of having known that traditional lending avenues, having exorbitant rates and rates that are not usually friendly to most businesses, SMEs, and even grown businesses. So these pushed me towards having to facilitate alternative, capital raising mechanisms to be able to be in the forefront or at the topmost level in assisting businesses to do this. So pretty much these are the two main reasons that directed me towards this field.
Thank you. Thank you very much, Isaac. Now, to you, Stephanie, you have worked with various industries in this area, from healthcare to renewable energy, agriculture, manufacturing, retail, education, and ICT. And those are just to mention a few. How about for you? What is it that moved you to be able to get into this industry?
Thank you. Thank you, Lucy. So how we got here is that my background is in finance, and worked in the financial sector for 13 years, or so to speak, specifically in credit analysis and risk management. And so from the corporate world, I saw this very problem with entrepreneurs, this gap whereby we'll have entrepreneurs come to the bank and looking for funding or financing for their enterprises, but here and then there are issues that they'll get turned down because there are gaps in their businesses. And truth be told, in most cases, there was not that sort of consulting or support in being told that you need to address, this is where the problem is, you need to address here and there. So Upscale really was to address that challenge, in a case whereby we are able to point out the gaps or the issues around that. So our motivation was around addressing that gap, in that the entrepreneurs may not actually know really what is ailing them and why they're having these challenges of being turned down by the banks or the other alternatives that are there. So that is one, so addressing the gaps. And secondly, also the lack of knowledge of what other options there are, financing options that there are in the market. So, and so there's that lack of information. And so we also help them to inform of what alternatives that there are. And of course, helping them also to structure what are the most ideal instruments that they can also apply. Sometimes you find someone looking for debt, but probably a different type of funding would apply depending on the stage of the business. So that kind of information is what we felt was lacking in the market, and it is a gap that we are looking to address at Upscale. Thank you.
Thank you. Thank you very much, Stephanie. Peter, you have expertise in flexible capital. You have expertise in global investment. You have raised funds across various landscapes, in Asia, in US, and now you are in Kenya. For you, what was your motivation to get into the industry?
Yeah, thanks, Jerry. Yeah, maybe not the most typical answer, but I think like my motivation behind it was really personally, it was just trying to I think like most entrepreneurs, you look at some of the most pressing issues and what are the biggest problems in the world. And I think that's what really motivated me to kind of get into this field. I think the reality is I grew up surrounded by entrepreneurs from a small nation in Ireland. And so kind of realizing that entrepreneurs and small businesses are essentially what drive society and really build stable, prosperous economies. I think my motivation of why I got into this field is trying to help build access to finance to build prosperous societies. And so I think that's kind of started my journey in to create quality jobs, stable employment, essentially is kind of fundamentally the biggest issue that the world is facing, that can solve the world's biggest problems. And so I think trying to tackle that problem of how do we get affordable, flexible financing to small businesses to drive prosperity is kind of why I got into it. Into this kind of space. And so initially, kind of before we launched Kua Ventures in Kenya, the parent company which I started with was essentially trying to do access to finance. So building microfinance institutions all around the world, 38 different nations, essentially trying to help support financial inclusion. And that's mainly microfinance, micro enterprises, which is a lot of the informal economy. And so in kind of the longer we've been doing that is realizing that now kind of the biggest challenge is actually getting flexible, affordable, the right fit capital to small businesses. That's the biggest challenge we're facing as a globe right now. And so that's kind of why we built Kua and the problem we're trying to address. Yeah.
Thank you. For you, Peter, having experience in commercial banking and private and microfinance sectors, as well as various leadership opportunities in credit, in retail, and in business development. What's your driving force for being in this industry?
I guess that was meant for me, Ruben.
Yeah.
So
sorry about that. Yes.
Yeah, sure. Being a career banker, both in commercial bank and microfinance bank, for the last 20 years, I saw a huge gap in terms of financing needs for entrepreneurs. And what happens is that when an entrepreneur is looking for money, one, there's no proper advisory on how they should approach it. At times, someone might be coming for debt, but maybe what the business requires is equity, and also how to even structure the debt and negotiate on it. And so I found a need in that, and I felt that at times entrepreneur needs or SME needs are not really well addressed by commercial bank and microfinance bank. Reason being there is no deep understanding on how they operate. And that's why you find an entrepreneur will go to a bank looking for financing. They urgently need money to handle a transaction, but the same transaction will take 3 months just to get an approval. And by the time they get their offer letter, funds disbursed, the opportunity is lost. And what happens with the entrepreneur, they have funds in place, they don't know how to deploy it well. Before they figure it out, the first repayment is required. And this, what happens is that ultimately it kills a lot of dreams and a lot of businesses. With that in mind, I tried to set up back in 2019, I founded Edenbridge Capital Limited, bringing across my years of experience, both in credit and operations and strategy, set up an institution that, one, keenly tries to understand entrepreneurs and SMEs from where they come from, the business they do, the payment structures, and out of that, we are able to structure financing products for them. And in the need that we feel they need another avenue of financing, we're able to advise them accordingly and even link them up with someone who can help them do that. For instance, when someone needs an equity transaction, which we're not well versed in, I'll introduce them to someone like Raisin Capital, who are also our partners. And from there, they are able to get the assistance that they require. So based on the motivation to support entrepreneurs to grow, because I personally believe for this country to grow, for us to create jobs, this is the work of SMEs and entrepreneurs. And what they really need is financial support and capital to drive their businesses. Thank you.
Thank you very much, panelists. Ladies and gentlemen, you have heard that each one of them has their why they're in this business, why they're here to support you. You can see from the chat section, you can follow each one of them on their social media handles. You have had the specific areas of support, which we shall also be speaking into in this session. So kindly continuously engage them, and we look forward to continuing this conversation. Now, Ruben, I think, let's break it down, because you've mentioned about various financing options. So the question is, what are the most common ones that are available for SMEs and medium-sized businesses? So for you, debt financing, break it down for us who are novices and for us who are experienced.
Sure, thanks a lot. Again, for SMEs, when there's need for financing for their businesses, I know the first point of contact that any SME will look at is friends and family. And more often, what happens is that for some SMEs, we'll feel that you end up exposing yourself, exposing your business so much to friends and family. And when you're unable to raise funds from friends and family, then the next step you think of is a bank. And the bank, more often than not, will come up with all this set of requirements that you need to meet. You submit. After some time, a week or so, they ask for more documents. And as I said earlier, by the time you get your offer letter, more often than not, the opportunity is lost. More often than not, you don't require that funding anymore, but the funds are here, and any SME, including myself, I think maybe I need this money for the future. But interestingly, over time, there are more options that are available for SMEs. And these options are dependent on, one, the stage where your business is at. Are you at seed stage? Are you at startup stage? Are you at a growth stage? Or are you a mature business? Because every stage requires a different setting in terms of financing need. And one thing we need to understand is that as a business, and this, I know most entrepreneurs, because we like running our businesses our own way, do you need debt or do you need equity? Because at a particular stage in a company where debt can be really, can be really tough for a company. And maybe what you need is equity. And if an entrepreneur cannot put in more equity, then you might think of looking for equity partners who are well aligned to you. And that particular time, one thing that is really critical, you need to understand your business really well, be in a position to tell the story. Second is that you must be in a position to value a company and value it really well, so that one, is not exorbitant, and two, you don't undersell your company. And some of these transactions require someone who can walk the journey with you. We have companies like Raising Capital. We have Stephanie, guys who can help you in this journey so that you are able to make the right decision. The other thing you need to look for when you're looking for financing is, what need do you have? Is it for capital? Is it for fixed assets? Is it for operations? Then how fast can I deploy these funds? At times you might ask for cash, but what you need for maybe is a short-term financing. Well, the cash you are looking for, or what you've applied for, is long-term financing. The other thing you have to look at is the period. And different companies have different business cycles. For instance, if it's an SME who is a contractor, and you go to look for financing, or maybe you're a school, you need to understand what are your repayment cycles. For instance, schools get bulk cash maybe every quarter. If you go and you don't understand how your business cycle is, in that you receive payments quarterly and you get financing where you're paying monthly, then after some time it's going to choke your business. And once it chokes your business, it kills your ability to operate and kills your ability to think strategically, because every time as an SME, you'll be stressed looking for the next repayment. So you need to understand your business cycles really well and how your payments come in, and be in a position to negotiate that really well. The other thing is understanding what's your pricing model. And can your pricing model accommodate the pricing you are getting from whatever debt you're looking for? For instance, some people will say most companies or most SMEs, their average margins, gross margins, around 30%. And if your average growth margin is around 30%, then you have to define it. Is it 30% per product? Is it 30% per month? Is it 30% annually? Then based on that, you compare that with the pricing you're getting for whatever financing you're being offered to you or you're trying to seek, and see whether the two correlate. The other thing you have to look at is the currency of trade. More often than not, you might be very good in imports and exports. If you go seeking financing in Kenya shillings, then you're exposed to foreign currency risk. If you're operating in Kenya shillings and the financing that is coming in is in foreign currency, then how do you cushion yourself against foreign currency risk? Because we've seen our currency fluctuate. At some points at 130, it had gone all the way to 160. And so I'm trying to imagine someone who had borrowed maybe when it was 120 and you have to pay when it's 160, then how do you cushion your business against that? So it's really important to understand all these modes and requirements before seeking any type of financing into your business. And there are different ways of financing apart from the rudimentary loans. You can go for something called private placement. Private placement basically means it will require an investment advisor. You'll structure a private placement agreement where you can seek funds from high net worth individuals. There are requirements prescribed by CMA on how to go about this. One, you must have a certain number of investors you're looking at, and the number of investors should never exceed 100. So again, the stage where your business is in is really important when deciding the kind of financing you require. The other thing you can use is a commercial paper. And a commercial paper can be both a private commercial paper or a public commercial paper, where a public, all the details regarding your company has to go public. And at some point, you even require to publish your financials maybe once a year or half yearly, depending on the kind of commercial paper you pick. And most of this commercial paper is what we call bonds. And so you can go to the market again through a financial advisor, and they advise you how to go about this. Personally, I've used a private commercial paper, and I can say it was really successful. Because one, you must be able to put in place, what's your story? What's your requirement? What's your business need? How best have you run your business? How are your structures? Yeah, what's your track record in terms as an individual, in terms of being in the same industry, and also as a business? Have you been profitable? What's your cash flow requirements? Will you be able to service your interest requirements and your redemption requirements? The other things you can look for is something like a private equity. You have individuals come in, put money in your company for a specified period, then you'll agree on the terms. Some of these private equity funds are really good because if you negotiate well, they can give you moratorium money on interest and repayment for the period you're required to deploy the funds. Then for some customers who are maybe in import and export, you don't really require debt at times. What you really need to negotiate with your financial is things like letters of credit, where this is a financial instrument that helps you to interact with your supplier without having really to exchange funds at the onset. Then you have venture capitalists. These are guys who will come into your business with a particular goal. But again, I say before going for private equity and venture capitalists, understand your business requirement really well and be very firm on the negotiating table. And that's why you require the services of experts like raising capital to do this. When it comes to alternate credit, we have companies like Edenbridge Capital Limited that will come take you through the financing process. We have tools that help us with analyzing our customers, and we use technology even in terms of finding a credit rating. And based on that, we can tell you this is financing we can give you for this period. These are your repayment cycles, just to make sure that whatever financing comes to your business is what you require at that particular time. Thank you.
Wow, Ruben, I tell you, I scribbled so many notes. I am hoping as many people as possible have done that. So before we go into our short break, I want to come to you, Stephanie. From all that we've been told, and specifically when it comes to equity financing, what are those mistakes that entrepreneurs, SMEs, medium-sized businesses do make that have not been spoken about, that cause them trouble when it comes to looking for equity financing?
Thank you, Lucy. So, some of the mistakes that we see with when entrepreneurs again are looking at equity financing, first is because has to do with the lack of understanding of how this equity kind of funding works. And what that does is that we see them speaking probably to the wrong kind of partners that they should not be speaking to. If we break down the different types of equity financing, for example, and we have the angel investors, we have the venture capitalists, and we have the private equity funds. And this range, from the angel investors pretty much support early stage kind of businesses, with the VC kind of funding taking care of the growth stage kind of businesses, and the private equity funds taking care of the mature stage kind of businesses. So what we see sometimes happen is a pretty early kind of stage business talking to a VC. And as we said, this is now where we are stepping just to be able to inform now that this may not be the ideal kind of partner at this kind of stage. So the one thing that we need to know is that, as Ruben has mentioned, depending on the stage of the business that you are at, different types of investors or funders apply to your kind of business. So it is important to understand who really pretty much would be your ideal partner. So if you're at early stage or at growth stage, or a pretty established business, it's important to know first, establish which stage you are at, and so that you are talking to the right partner. Again, also the other mistakes we make is probably going in too early. Maybe we are at a stage whereby we are just developing an MVP or a minimum viable product. And so we are yet to pretty much not know how this product is going to roll out in the market. We have not done enough research. We do not have numbers that we can really support this that we are working on. And so at the stage that we are engaging the investors or having this conversation, it's not very clear what it is that we are working on. So that again can be a mistake and works against us. Again, also when we are not structured in terms of in terms of our team and issues around governance, this is something I'm sure Peter is very keen on, and looking at the kind of the team which is driving the mandate of what they say they are doing. So also having running enterprises that are not structured is another mistake, because that also comes with risk around that. And so generally just how the business is being run are things that we need to be keen on. If we have not looked also into matters around compliance, that we are we are compliant in accordance to the regulatory framework, or other issues that we need to look into. Our operations, our systems and processes are in check. That is another issue that can also be a risk, because potentially what investors and the financials are looking at, what we summarize at the 2 R's. And the first R has to do with the risk exposure, and this can cut across many factors in the business, whether it is a team, whether it is the operations as I mentioned, whether it has to do with the numbers, whether it has to do with the systems and the processes. So look at any areas in your business which could be a potential risk, because now that if it is not looked into, then it can be a cause of a bottleneck when you are having these conversations. So sometimes we have not addressed that. So that the risk bit of it, and then the other one is the return, because if they are looking to invest, there is a return which is expected. So have you looked at the numbers? And like, for example, sometimes when we have these conversations around the numbers, sometimes we find that not much time really has been taken to look at how the future of those numbers look like, or the numbers that have been given sometimes are, the assumptions do not add up into how they're gonna morph out and how they're gonna be possible. So it is important also to be able to really understand how, have that understanding of how those numbers will come to play. So around those 2 areas, the risk factors and the returns, lack of that understanding and having not really worked on them, a lot of mistakes fall around there. And so as entrepreneurs, it becomes important that we take time just to look at our businesses in being able to seal those possible bottlenecks, which become the reason why it becomes hard to have these conversations.
Truly appreciated. Now, if I have to just an attempt to summarize what has been spoken, it has been rich. That's why I keep saying I'm hoping everyone is scribbling. I do have copious amounts of notes. One of the things that is coming out here is that there's lots of knowledge and there is an expectation for each one of us as entrepreneurs to actually go and look for knowledge. And we want to truly appreciate you for being here looking for this knowledge. Before I make my summary, Isaac, go ahead, please.
Okay, thank you, Jerry, for the opportunity. So my co-panelist, Stephanie, highlighted very key points that entrepreneurs or businesses make. So perhaps just to summarize what she said is, if you have a transaction advisor, they will tell you all the mistakes that you ought to make and work with you all through that process. So it is advisable usually to have a transaction advisor who will highlight to you as a business all the avenues or all the mistakes that you can avoid, the pitfalls, so that you have a smooth path towards the raising fund. So it's a key point that I wanted to highlight because it summarizes all the mistakes that most SMEs make. Thank you.
Ideally, what you're saying is, and as an entrepreneur, I should not say, I know this, I've been in the business, I can do this alone, kind of a thing. And that actually leads to just that. So we actually need to have the knowledge of what are the kinds of either debt financing or equity financing that we need. I always hear when it comes to debt financing, there's a third name. There's friends, family, and there's the other F. I laugh about the other F because it's about fools, because if someone does not understand your business, then literally they don't know what they have invested in. But hopefully you as an entrepreneur as well, you have made the point to inform them. Debt financing, you have short or long term, you have aspects about letters of credit, you have knowledge for yourself about what is the kind of pricing model that you need to have, so that when you're coming to debt financing, you understand what are your cycles when it comes to payments. When we come to equity, we're talking about early angel investors for early stage. We're talking about venture capital for growth stage. We're talking about private equity for mature stage. What kind of debt what kind of financing are you looking for? Are you looking for grants? Are you looking for debt? Are you looking for equity? And what kind, and where are you at in business? Do you understand the risks that your business has? Do you understand what are the returns that the person who's giving you the finances is looking for? By and large, we're talking about, are you working with somebody? Is someone holding your hand? Or is it a case of the blind leading the blind? That means you've gone to another entrepreneur who says, even I got money from this person, come and tell you how it is you're going to save money. Sadly, that sometimes you might end up in a ditch. Something to be very careful about. Interesting point, Helen. We'll come to that. If you can put it in the question and answer so that we don't miss it out in the conversations in the chat. But at this moment, we'd just like to take just a brief, like 1 or 2 minutes, and be able to respond to our poll. Our poll is going to be launched just now. So we'd just like to hear from you from this poll so that we can get to understand, even from your end, what other aspects of how you shall answer the poll can we steer this conversation. Is our poll ready? In the meantime, continue scribbling your questions in the Q&A section. Super, there is the poll. Kindly just take time to answer us. Keep the responses coming. Thank you very much for taking the time to respond to us on this poll. And it looks like we might almost get a balanced or an equal number, but keep them coming, please, please. We are over 100, 125 of us here. We'd just like to know, and it also helps our panelists know what kind of field of play are they in. A good number of us are yet to respond. We are at 75. That's about another 50 something of us to respond. Kindly do respond to us. It will be interesting to just understand how, if you have previously tried unsuccessfully, would like to hear even your questions, what responses the person who denied you the funding did give you, and if we have covered them, that is good. If you have never received funding before, would like to hear, is it because you have never applied, or you have been discouraged from whatsoever points, questions that you have heard? Interesting, this conversation on philanthropists. I may just have we'll see who will be able to answer that, but panelists, please keep them coming. But as I keep saying, please do have those questions in the Q&A so that we do not miss them when everybody else is putting their questions in the chat. When it comes to the webinar, that's a provision that helps us. 83 of us, kindly, 40 something of us have yet to respond. Please do respond to us on the chat, on the poll. That will be really useful for us, just to get to know. And because this is how products of finance are developed, by getting to understand what are the challenges there in the market, and what kind of solutions should we be coming up with. So I'll just give another 1 or 2 minutes for 40 something numbers here, just to be able to respond to us on the poll. Okay, there is a comment to send the poll again. My dear team at the back end, could you kindly just relaunch the poll again? I don't know whether that's going to have an impact, but just see how to support. It has disappeared. Okay, 1 last minute for us to respond on the poll. All right, closing, going once, going twice, going thrice, and the poll is closed. Are you able to just show us what are the results of the poll? All right, so 38% have received funding before. 46% have never received funding. Question there is, have they tried to, and what are the challenges they faced? And then 16% have previously tried, but have been unsuccessful in getting the funding. And that is how we start our second session. And to begin, what are the myths around funding? I will ask Peter to get us started, and then I'll come to you, Isaac. What are the myths, Peter?
Hey, sorry, and Jerry, I missed you there a second. I think you cut out. Can you repeat the question?
Oh, sorry. What are the myths or misconceptions around seeking funding whatsoever?
Sure. Okay.
Funding.
Okay. And can people hear me okay? I think so. Okay. Yeah, I think
You got that?
exactly. Yeah, I'm live. Yeah, you can hear me. All right, let me continue. I see Isaac nodding. Thank you, Isaac. I think some of the biggest mistakes or the myths around fundraising, I think, is, and some of the panelists have already mentioned it. I think we really need to be really careful about all investors are the same. I think just like in the poll, I can see people in the chat from philanthropists to venture capital to private equity to angel friends and family. I think one of the challenges that entrepreneurs have is that thinking through your ideal investor, like going through your own checklist of understanding your business and understanding your business model, I think is a critical component. But I think someone asked a question that's talking about investor readiness, right? Like we've been through so many courses and classes. And so I think one of the really kind of important components for an entrepreneur to be thinking about is, especially if you're running a small business, which is the majority of businesses in the market, is just evaluating the right type of capital for you, all right, and understanding the risks and return expectations of the different type of financer, and really thinking through the implications of that to your business as well, right? And so I think entrepreneurs are really optimistic. They love their business, and they need to be optimistic to be able to run a business and to endure the challenges that you face. But one aspect I would really kind of encourage you is this just getting into that. Like, I think one of the challenges we always face when we're looking at business is just the financial records, like just the availability and accessibility of just having your financials up to date and ready. And I think the biggest challenge I find of that is that just like when you're a lone shareholder, you're starting your business by yourself, there's not necessarily that monthly, quarterly discipline of like prioritizing that task of actually submitting your reports to someone outside of yourself to actually get independent feedback. And so because most businesses don't necessarily have an active board or advisors or other investors that are currently involved. And so I think as you're starting your fundraising journey, one is getting knowledge, like you just said, and Jerry, but the other part is just really getting into that discipline of prioritizing reporting and setting up those systems in your business so that you can be ready to defend and articulate, but also to seek feedback in really understanding your business. I think for me, like I have investors, and so I need to kind of be into that discipline of regularly reporting, and and it can be really kind of difficult task of taking time out of your day to do that. But I think that's a really important aspect for small businesses to really be thinking through. How are they reporting? What are the systems that they have in place? Because that kind of really helps you kind of assess like what is your revenue, what is the financial readiness of your business to absorb capital, but also prepares you to have those honest conversations with different investors. And so, and I think to a lot of what other people are saying is like there is a deficit of capital in the market, right? So it's very competitive. And to your question, Jerry, about some of the myths is that there is a variety of different type of investors, but there is not enough capital in the market for all the businesses that are seeking investment. And I think that's one aspect is the competitive nature that entrepreneurs are facing to position themselves and to focus their time and energy to get to the right investor. Because you might be pitching to a VC that needs a 10x, expanding across the whole continent type of potential, and that might not be your business. And so really trying to understand your business model and how you generate cash, what is the potential of what you're doing, and really trying not trying to kind of align your business to the available capital that you have, which can really distract you of actually just building a solid business. And so, because I think one thing I'll always say is that, I mean, the banks should be the kind of lion's share of the market lending to SMEs. Okay. But realistically, in Kenya alone, they're not under any pressure to take any risks. Okay. And that's just the reality is that they're very risk adverse. And that's what's forcing small businesses to look for other capital and forcing it into the VC, private equity, angel investing route. But VCs and private equity, they're very specifically looking for high growth, disruptive businesses. And that is not every business. And so I think that's the aspect of really just understanding your business, being careful in your fundraising journey so that you don't spend 6 months, a year or two trying to raise capital when you need to be focusing on your customers as well. And so, because customers are your best financer, right? Just delivering a quality product and a quality service is the fundamental core of what you need to do. And so you just need to balance that. But yeah, I'll pause there. I'm sure there's so many rabbit holes we can go down to discuss that.
Well, true. Isaac, are there any myths or misconceptions that we have missed out that we can just make mention of?
Thank you, Njeri. Yes. So I think that is an important question that most entrepreneurs should know, because if you choose the path of raising capital, these are the things that you need to know so that you don't assume this is how it should be, yet it is a different case. So one of the common myths that we've interacted with as a consultant is most businesses think that they have to be profitable to seek funding. Yeah, but that might not be the case. So different investors have different criteria for investment. So most investors will be looking for potential synergies in the business. Will that business help them to enter into a particular market? Will it help them, in the supply chain of their business? Yeah, will it help them grow towards a particular industry? So this is one of the common myths that we've experienced. And we like to tell business that if you're making profits, if you're making losses at the moment and you foresee that you'll make profits in the future, you are eligible for funding. So that is the first myth that we face during our course of our business. The second myth that we face is most entrepreneurs think that they have a great idea. So they think that since I have this great idea, I'll get funding because there's no one else in the world who has come up with an idea like this. So that is a myth. Yeah, it is not guaranteed that if you have the greatest idea in the world, you'll get funding. So it is upon having advisors who will tell you that this is a good idea, but it's a good idea on paper. This is what you need to do for it to convert into a bankable business, business that can be investable. So that is a pretty much common, you can see someone commenting a great idea syndrome. So it's a pretty much common mistake or a myth that most entrepreneurs, I can see you, Njeri, smiling. I don't know if you are one of the culprits of these myths, but we will know. So that is the second myth that we come across a lot. The third myth is most entrepreneurs think that if they successfully raise capital, that will guarantee business success. That is not necessarily the case, because it is public knowledge. There are very many companies that have raised a lot of funding, but they don't, 1 year or 2 years down the line, you hear the company has shut down. So you ask yourself, these guys raised this amount of $1 billion. What happened? Yeah. So we like to inform, businesses and put word out there that having raised capital is just the first step in the process towards business success. So you need to know that once I have this capital in place, what do I need to know, or what do I need to do to make sure that I make the business towards success and profitability? So lastly, the most common myth that we receive is you want to raise more money. The more money you raise, the better. No, me, I want to raise $10 million. So we like to tell businesses, you need to curate your capital raise to the needs of the business. Yeah, you can't want to raise more and yet your business cannot be able to, take care of the capital raise. So you need people who will sit you down, walk through your financial projections, tell you that this is the amount of capital based on your current stage of your business or based on your projection of the business. This is the kind of capital that is ready and it will be useful and convenient for you. So these are many common myths that we experience. I can see many comments from the listeners because I feel like I've touched them to the soul. So these are the four most myths that we get, and our job is to debunk them. We say, this is not right, this is what you need to do. So I hope that answers your question, Jerry. Thank you.
Yes, it does. And it is okay that it provokes many more questions, which is good. Now, Peter, you touched on a very interesting thing, but I'll throw this also to Stephanie about the lay of the land when it comes to raising capital here. And there's some comment that I made earlier, and this is again someone's opinion, that because of what just Peter has said about there being not enough or deficiency in capital. So what that person was saying is that then the perception of that person was most investors are looking for unicorn, or what I like to call unicorn-ish kinds of businesses. And for those businesses that are growing steadily, nobody seems to be giving them money. Just broadly, Stephanie, what's the lay of the land when it comes to raising capital? What's the landscape? How has the landscape moved? Where did we, where are we at? And is that even a justifiable opinion to have?
Thank you, Lucy. And a good concern right there, which I've encountered with most, entrepreneurs. And so the landscape has for sure evolved over time. In the last 10 years or so, we saw the banks really being the ones which were running with the financing. And like Peter has also mentioned, they still take the lion's share, probably 90%, but this may have changed over time. So we are seeing the new entrance of other alternatives in the likes of the equity kind of funding and other types of instruments which are available for financing. So this has for sure evolved over time, and we have these different types of funding that is available. And so to address the issue around, most investors are looking for the unicorns, we have seen over time with the growth of the tech ecosystem and this startup boom that we are seeing, especially in Nairobi, and with the startup, ecosystem around being dumped as the Silicon Savannah currently. And we have a lot of incubators and accelerators running with programs helping, startups in, especially with tech-led kind of initiatives, getting support around here. And why this is happening, just to speak a little bit about that, is because of the nature of the tech businesses and the ability to scale with minimal kind of investment. You see, when we look at the tech kind of businesses and the brick and mortar, the tech usually takes most of funding would go probably to the product development. And so there is really not much investment which goes to, as opposed to the brick and mortar kind of businesses, whereby maybe you are having to open, maybe, is it like a shop, and you have to put some equipment, you have to put some infrastructure, and there's a lot of, capital intensive kind of investment which goes to that, and it takes time to turn around or to recoup that investment. So for the tech kind of businesses, they are known to scale very fast. Probably you are talking of once the solution has been you have been able to develop the product, you can be able to serve so many customers across even different regions globally. We see the likes of the Uber and all the ones that we know. So that is the reason why we find the tech kind of businesses attracting a lot of capital as opposed to the brick and mortar. But that does not mean that the other kind of businesses are not getting funding. There's funding available for them as well. And so it is just about being able to know what is the ideal type of funder that I'm looking for, and who are they and where are they, because I have encountered cases whereby we have these kind of businesses other than the tech-led kind of businesses, and are looking for funding from those who are focusing on funding those who are having tech initiatives. And we are having and of course that will not work. That will be a challenge. So the likes of the other sectors like the healthcare, education, manufacturing, the fast moving goods and the likes, they still are funders who are looking for those kind of businesses. The most important thing as an entrepreneur is that you need to be able to demonstrate that your business has the ability to still be able to grow. Because two things that we really need to be keen on around, the growth ability. Well, if I can add that one. So there is the ability to scale, or scalability, very important. And of course, a business is around making a return. Profitability needs to be demonstrated. And lastly, sustainability. So we are running businesses right now. They may look all up and able to, because we are solving a problem. And again, also, we need to look at the ability to be, that business is going to be sustainable in the long run. And this has to do with the market that we are addressing, or the customers that we are serving, that looking at the lifetime value of, we are providing for our customers, or the bigger market, and how we can be able to reach out to. So I'm just looking at the comments, and there's a lot of requests I'm seeing around people looking for grant funding, and nothing wrong with that. But what I noticed with what happens a lot is that we are looking for grant funding because we feel there is no responsibility that comes with grant funding. But what happens is that even in as much as we are not paying back the grant funding, there is very reporting that is required, which comes with how we are using this funding, and their metrics, which comes with the impact that we are creating with the funding that we are getting. So, but while at it, what we need to really understand is that once the grant has come, because I've seen enterprises who have gotten, the grant funding, but at the time that this grant funding is able to take care of our burn rate, or the cash flow for operations, costs, and the like, we forget about focusing the main thing, as Peter mentioned, which is taking care of the customer. And this is a window where actually now we should not go to our comfort zone. We should now focus on, now that we are able to take care of our costs, how do we build the business so that when the grant is exhausted, we are sustainable, and the business can be able to sustain itself, and then we can be able now to attract other alternatives. So even in as much as we are looking for grant funding, and we get it, let's not be comfortable. Let's focus on building the business. So answering the issue around the tech, why the tech kind of businesses are attracting funding, like I mentioned, has to do with their ability to really scale with the minimal, capital investment as opposed to the others. But the rest still also have the options where we are seeing an increase in terms of, VCs and PE funds, both locally and international, We have impact investors, which are also looking at the kind of impact that we can be able to create in our businesses, whether socially or in terms of environmental kind of impact. We are seeing the rise of angel investors. For example, can look out for the networks where we have the likes of the NIBAN, that is the Nairobi Business Angels Network, who are also looking to invest in businesses. Those can be sector agnostic, where what that means is that they can be able to invest in different sectors. We are also seeing the likes of just individual investors. Sometimes they are among us, they have capital, they don't have all the traditional kind of investments which we can do, but they can still be able to, they are invested in those ones, but they are also looking for opportunities, and probably the idea that you have is the one that they can also be able to invest. We just need to be able to really communicate and show really where the money is. Then there's a crowdfunding platforms. This is taking slow in the market. Still issues to do with the integrity, from what I see, is what is probably not, we are not seeing crowdfunding really happening, but we know, I know of some, enterprises which have been able to raise funding from crowdfunding platforms. And so there are alternatives. There is funding for every kind of business. We just need to be able to focus and know really pretty much where we are at and who is the ideal partner, so that we are talking to the right financiers who really match where we are and where we are going.
Thank you. Thank you for that rich response, Stephanie. Ruben, so we have heard that, yes, potentially, whether from globally or otherwise, there's been a bias to the tech world for investing. Now, locally, we've also been told about they call it the rest. So now, coming to you, which are these industries that are the rest that have been funded? What is that capacity that they have? For that reason, they've been able to attract that kind of funding. If you want to mention a few names, yes, but just let us know what industries are these.
Thanks a lot, Jerry, for that question. And maybe just to add on what Stephanie was talking about, I know there's a whole conversation around funding mostly going to unicorns. And I would say it's both a perception, but also there's something else that we need to work on, especially what I would call African entrepreneurs. And one of the things that we have a challenge around is the aspect of storytelling. We have amazing businesses, we have amazing business ideas, we have very unique business ideas, but how good are we at storytelling? Because if we don't tell your story really well with precision, then no one is going to invest in it. And if, again, no one understands it, then how are you going to get funding to a point where you can grow 10x or 100x or something like that? The other thing is the aspect of scale. Are we building businesses that are scalable? And what I say more often than not is that we tend to start businesses to earn a living as opposed to starting businesses that are scalable. And then each defines what's the ultimate goal for any enterprise that we run. Because yes, earning a living is important, but also what is the future of our businesses? And no one wants to invest in a company where it's just there for the entrepreneur to earn a living. Do you have structures in place? What's your capacity to absorb whatever funds you're looking at? What's your capacity to scale? What records do you have in your businesses? Because yes, true, we can keep up entrepreneurs, we can have all our records in our heads, but again, someone else has to see these records. Someone else has to look at your trends. And I know for the last couple of years, there's been a lot of funding around tech companies, there's been a lot of funding around fintechs, because that was the in thing happening there. But also as an entrepreneur, we have to look at also where is the money going? Because once you understand where the money is going, then you'll be able to look for it. And globally, we've seen a transition from what we used to call MDGs to what we call ESGs today. And we need to really understand what are these ESGs and what are they looking to fund? And because no one will just come and put money just like that. They have to understand what's the ultimate goal of the business. Right now, we see a lot of clamor around climate. So if the event or anything to do with climate and the environment, there's a lot of money in that. A couple of years back, money was in fintech. A couple of years back, money was in gender-led businesses, where we had businesses that are more led by, let's say, women and youth, received a lot of funding, both in grants and easy funding. But we have to understand where is the money and what is the money looking for. Because once we understand that, then we are able to align our business where the money is going. If money is going to climate, ask yourself, in my line of business, what am I doing that is impacting climate? How can I align my business to something that is environmental friendly? Then I can tap into this money that is going towards climate. Because not every money is going everywhere. Because I know a couple of years back, we had agriculture and agriculture value chains. But over time, we are seeing that particular funding line drying a bit. Yeah, it's not as much as it used to be. And again, it's not easily accessible as it used to be. The other day, I was seeing a bit of funding coming also in areas around what we call marginalized areas. So businesses operating in places like the ASAL areas, there's funding coming in that direction. So we have to align our businesses and understand that whatever I'm doing, is it in line with where funds are going? And again, what is my capability to absorb these funds? Because yes, you can be looking for $10 million, but can your business absorb $10 million? Is your business scalable? Where do you see your business in the next 5 years? Can an investor come in and say, we put in these particular funds, both in terms of data and equity, your business is going to grow 10x? Because every investor, especially equity, they're chasing after returns. And if they're chasing after returns, then they have to see the capability of your business to generate those returns. And lastly, I would say we have to get out of the myth that a business has to be run by you, your founder, and yourself, and only yourself. And I can tell you for free, no one will look at that business, both in terms of grant and in terms of long-term debt. And also in terms of scaling, there'll be a challenge in terms of scaling when it comes to that. Thank you.
Ruben, you are really poking holes, because the next question I was going to ask you therefore is that then how I, as an entrepreneur, do I prepare myself to be attracted to an investor? I call this relationship a suitor, preparing yourself for a suitor and to look attractive to that person. So you've mentioned issues about what is that I should be able to look at now as a novice to say my business has the capacity to maintain that debt. My business has the capacity to grow using that equity. What are those numbers I should be looking for? What are the things in my business should I be able to answer us from the point of view of being novices, especially from the questions I'm seeing here, but also how about even for that person then who is at mature stage, what else should they be looking for as we begin to come to the tail end of our webinar this morning, this afternoon?
Right, and I'm sure Isaac and Peter will jump into that question. And I'll give a very good example of myself. I founded my company 5 years back, and I had an option of running the company alone. But I knew for me to scale this business and to have proper structures in place, I must have partners. And what I did is that I identified partners who have the skill sets that I want and who have the ideals and ethos that I want. I know Stephanie spoke a lot about integrity, which really affects our market. And we've seen quite a number of companies going belly up because of lack of integrity. We've seen quite a number of people not being able to access credit because of lack of integrity. Because when you don't pay your debt, when you're supposed to be paying, it's lack of integrity, which really affects our market. And one of the things that we really did right from inception is that we tell you we have to have proper structures and governance. Because governance is really key when you're fundraising. And we set up a board right from day one, and our board of 5, which currently we scaled to a board of 6. And when picking our board, we were very clear. It was based on skill set. We had someone who is very good in tech, we had someone who's very good in fundraising, we had someone who's very good in finance, we had someone who's very good in markets and people. And all this helps complement the entrepreneur in areas that you are struggling. The other thing is that you must be very good at keeping your records. Creating a small business, what are your sales? What are your purchases? Who are your suppliers? And what unique thing identifies you in the market? Because all of us have unique ideas, but we realize when you go to the market, we have quite a number of competitors. What sets you apart from the next person? And number two, do you have a strategy for your business? And a strategy doesn't have to be a 30-page document. It can be a one sheet, what we call business canvas model, that describes everything about your business. And at a glance, any investor can come check it in. Even you understand it very well. If you have a team, they understand it really well. And it makes everyone in the company well aligned to a very clear direction, what in my company we call the true north. The other thing is the capacity of your business to absorb those funds. Let's say you're at sale and you say you want $10 million. What are you going to do with the $10 million? How long will it take for you to absorb the $10 million? Do you build the necessary cash flows? Because if it's debt, you have to have cash flows to service your debt. If it's equity, later on, you must have cash flows to help pay your investors the return they want, because everyone goes in with an expectation. So you must have the capacity to absorb that. And you have to align your business. What's your unique position? What's your market position? What's your market share? More often than not, you hear people talking about market share, so that you're not just operating to put food on the market presence. The other thing is also your negotiation skills. And this, I find transaction advisors coming in very clearly. People will come with all sets of prepositions to you. I know Peter will say there's no adequate capital in this market, but I think there's a lot of money in this market. But the only thing is that, how well do you negotiate? I've had guys come to me and they tell me they want to give me money at 12% to the dollar. And ask myself, if I take money to 12% to the dollar, will it make any business sense to me? Then we must be very clear. What do you want? How good are you at negotiating? How good are you at telling the story? And how good are you at making sure that whatever you're negotiating is good for the business? There's a guy I really follow and admire, known as Mark Cuban, and he said, anytime you go to the negotiation table, you must look around the table and ask yourself, who is the fool on this table? And if there's no fool, then be sure you are the fool. So make sure at all times when you're negotiating for your business, you're not the fool on the table. Thank you. Maybe I can allow Isaac and Peter to jump in.
Yeah, so maybe I'll just sort of add a few different kind of points, just kind of on, I can't remember the original question, but it's more just on some of the kind of benchmarks that we're looking for. So just a few things I've kind of written down, but it's more, one of the things we're always looking for is traction. So depending on whatever stage of your business is at, like we want to see, like for us, we're looking for a minimum of 5 million shillings in revenue in the last 12 months. And of course, different sectors can be that really depends. If you're selling a, 50 bob lollipop or a cancer treatment, right? There's very different. But essentially what we want to see is lots of customers. The more customers you have and the less dependency on one customer, then that is really positive to us, because then that shows that like the product market fit is good. It means that the service or the product that you're offering your customers is being validated by people purchasing your product. And so the more customers you have consistently buying your product or service, the more confidence I have as an investor that it's not about the capital we're putting in. The capital will kind of catapult you to get you where you need to get to, but your customers are the ones that are going to be the real cash injection into the business. So we love to see lots of customers, okay? Now, we also are open to taking on risk. And so we're not looking for you to have thousands of customers, but we do want to see some traction. And like yesterday, I had a conversation with an entrepreneur and he's like, I've got my product market fit and I need to go launch the business to the next level. And I was like, here, you've got 30 customers, product market fit is probably closer to 400 or 500 customers. Okay. And so there's but it's okay. 30 customers is great. And so, but depends on the investor and the stage your business is at. But we don't want to see a dependency on like, here, I have 30 customers and one customer is 90% of my revenue. Then that will also get us a little nervous, because if that customer decides to move their business to another place, then it's a little risky. So one is traction. The other one is like I think about kind of getting ready to grow your business is like your operating cash reserves. Like how much cash do you have in the bank to be able to pay your costs to survive another month, another 2 months, another 6 months. And so I know cash is so important to drive your business and growth, but as an investor, we want to see really effective cash management. And so we want to see you reinvesting the cash in the business, but if you're driving that line so tight that like if one customer doesn't pay, you can't pay salaries or you can't acquire your inventory, then that is a huge risk to the stability of the business. So just how you manage your cash, and not like we have a lot of people apply to us because they've got lots of new customers, which is great, but now they're running out of cash and now they've had to acquire raw materials another way, which is way more expensive. And so now the business is being run into the ground. And so just like balanced growth, which is ambitious and reinvesting into your model, but not too aggressive where you're jeopardizing the fundamentals of the business, where you need to protect your cash as well. The other one is kind of like the use of funds. Like when you're applying to an investor, I think Ruben, you mentioned this as well. If someone's like, "Here, I need $10 million." I think for us, kind of a rule of thumb, whatever stage, however big you are, like look at your last year's revenue and then kind of use that as a bit of a benchmark of like, if you have 6 million shillings in revenue and you come looking for 15 or 20 million shillings of a loan or equity or something like that, it's really just trying to align that as an investor looking at it, we will be balancing the risk as well to understand how much do we want to deploy into the business, aligning that to the traction that you already have in the market, and then aligning that to your cash and your reserves and how you're building. The other one is the margins. I think someone mentioned that earlier on. Like every industry is really different, but it's just really understanding especially for the traditional brick and mortar small businesses, they don't necessarily have those 80% plus margins that a tech company ultimately will have when they get to scale. And so it's just making sure that you're pricing your product correctly. We have a lot of services companies applying to us, and they need capital because they're running out of cash. And then our question is, well, are you pricing your service correctly? Because that's also connected to your product market fit. Because if people are purchasing your service, but you're not pricing it correctly, you're always going to be running out of cash. And so it's like, are you delivering value to your customer, or you're competing with the market? And so you're just driving your prices down. And then that's a strategy challenge, because it's like, are you competing for price, or are you competing for speed or value? And so I think that's just sort of a quick kind of few points of what we're looking at when we're looking at a business. And so whatever stage someone's at in their fundraising journey is just really thinking through, because that's when it comes back to, as an investor, what are the alternatives we're investing in? And so from a currency perspective to, just putting your money in deposits offshore, I think that's where when we're looking at a business, we really need to see a lot of these fundamentals. And that's the investor readiness that an entrepreneur or a founder really needs to focus on, to build a very attractive proposition for an investor to take a risk.
Thank you very much, Peter. Isaac, even as you answer the question, what role then does technology play when it comes to accessing funding? Whether it is in operations or just really broadly, what role does technology play?
Thank you, Njeri. So as we've gotten to see recently, technology plays a very important role because you find that most investors want to see the data. So they want to know if your business is data driven. What are the numbers behind the customers? What are the numbers behind the business? That they can rely to invest in the business. So this puts technology as a very important factor that all businesses should be looking to incorporate. And with the advent of AIs and bots and many tools at the disposal of entrepreneurs nowadays, it is easy and quite practicable to, find one of the tools, technological tools that a business can plug to allow them to be attractive to investors.
Thank you. Thank you for that. Now, there was a question about philanthropy. Do I give that to you, Peter? And how different is it or same to what you are doing at KUA Ventures?
Yeah, I can touch on that. I know there's exactly, I'm trying to balance some of the chat items as well. And so that's a hard one, right? I think Stephanie made some great points that like, not all, like no capital is free, right? And I think one of the challenges we have when we're looking at businesses that are really strong businesses with great offerings, but there is a lot of philanthropic capital available, right? And so I don't know all the names and which, like from foundations to individuals, obviously philanthropists are a lot more focused on specific sectors, education, healthcare. And so, but there is a shift from philanthropists moving more to impact investing. And so I think that is one aspect where, to Ruben's point, aligning to where the capital is coming from and what are the fund objectives of the investors, whether philanthropic or commercial. And so I think the real element is that there is capital available. There is a lot of grants available, a lot of coaching, capacity building, technical assistance. But there is a lot of organizations giving grants towards CapEx, kind of helping small businesses kind of launch forward by getting them equipment, machinery, etc. It's not necessarily always for working capital, which is some of the most critical components that a small business will need. I would just say, so I would agree that for some, especially for the startups, like, a lot of the banks, impact investors are it's going to be very difficult to back a traditional small business without any traction, without any customers at the kind of startup, kind of proof of concept stage. And so that's where grants can be really helpful to help you kind of build some track record. At the same point, you do have to count the cost, and transitioning off grants to commercial capital. We've walked away from a lot of businesses because it's just the business is just not ready. It's like, here, I'm going to stay fundraising and looking for those grants. And that is a very time-consuming effort, from finding donations and grants to the reporting and the resources you need and capacity you need to have internally, because they're giving a granted donation. So you have to be able to report impact. And so it's a fine line between those grants and donations are needed and they are available. And there is a lot in East Africa. At the same point, it does come at a cost. And so I think that's where just focus on your customers, but leverage them as much as you can. But exactly, we're more in the investment space, so I don't have a list of all the donors in the market. But I mentioned in the chat MasterCard. I think for us, maybe 3, 4, 5 of our portfolios, we have 24 businesses in the portfolio, have received MasterCard grants early on in their journey, which was a significant injection, which allowed them to get a lot of the traction, get a lot of their customers to build out their platforms or to acquire machinery and equipment that enabled them to get to a stage where during our due diligence, we were like, okay, this business is ready and has reduced a lot of the risk because they have captured more of the market, they got more customers. So that made it, whereas if we had met them a year earlier or at the same time as MasterCard, we might have walked away because we're like, here, this is too risky compared to another business that we are looking to invest in. I don't know if anyone else wants to speak into that. Ruben, I think you questioned on the chat of me thinking that there's not enough capital market. You think there's a lot of capital in the market. So give us a list of all the philanthropists here in the chat, and send them to me as well, will you?
You can have that conversation.
All right. Panelists, we truly appreciate your time. I am looking through the chat and I think we've done good justice to be able to answer the questions, because questions such as what about the startups that deal with small businesses in Kenya? Tracking the traction is tricky. How do you consider that? Over and over again, we've kept saying you've got to find a way to have the data. It is the data that justifies the kind of funding that you get. Even if you're going to get a grant, someone wants to see what have you been up to. There was also a comment here about, again, panelists make mention of the startups. Wow, my dear people, this is one thing that you cannot run away from. Yes, startups are eligible for funding too, but again, you've got to have your data, you've got to have information, you've got to have knowledge about what your business is about. You've got to understand what are the risks in your business to be able to justify why should you get that funding, and when that funding comes, in whichever form it comes, how is it going to translate to sustainable business growth in your business. Okay, I think, okay, so there was this one. Which of the financials can consider investment or investing in e-commerce multi-vendor marketplaces? The marketplace is ready to go live and it is looking to sign up vendors to have their online stores. Capital need for marketing and IT. Quite general, but Ruben, do you want to make a comment on that even as we come to the end? Did you get the question?
Can you repeat the question so that I can understand the question?
So the question reads, which of the financials can consider investing in e-commerce multi-vendor marketplaces? The marketplace is ready to go live and is looking to sign up vendors to have their online stores. Capital need is for marketing and IT support.
Thanks a lot for that question. And I think from where I hear that question is like a startup that wants to roll into the market in terms of an online platform, and what is required is for any investor to really understand the business model clearly. And at that point, I think what it requires is a venture capitalist who can put in money with an expectation of a return to fund the marketing, because I know marketing will be very critical to that. Number two will be enhancing the infrastructure, though it's not mentioned in that will be very critical. And lastly, just supporting OPEX, and that will run for about a period of 12 years. So that requires a bit of a proper structuring, and I'm sure my friend Isaac and Stephanie would gladly step in and just help him structure that and make sure that is attractive to anyone who's looking at that side of our business.
And so in that order, we'll begin with you, Isaac. Your parting shot, what advice do you have to these over 120 entrepreneurs that are here when it comes to accessing funding? Are their businesses ready for funding? What are those things they should look for? Really, what is your advice as your parting shot? We begin with you, Isaac.
Thank you, Jerry. So my parting shot to the businesses will be first to identify your capital need. Look at yourself, look at the business, and determine what is the need for your capital and what structure is appropriate for you. Is an equity structure appropriate for you depending on the stage of a business, be it a growth stage, an early stage business, or a mature stage. So if I can reiterate, the first thing is look at the need of the business at the time of requesting the funding. The second thing is determine the cost of capital. If it's debt, how much will it cost the business? What are the interest rates? Where do you get funding for this debt that you're seeking? If it's capital, you should be willing to know what it will cost you as a business. Are you willing to cede a particular stake in your business? Are you willing to have an arrangement that will make sure or will ensure that you get to cede some of your shareholding as you seek to get some funding for the business? So those are the two main things that a business can consider before going to seek funding. And what I might also add, which is a very key point, is to know how ready you are for funding. It's the first and most important stage that we advise business in. How eligible are you for funding? You can't say based on your thinking, but you need an advisor who will look at your business and inform you if you are at this particular stage in time eligible to access funding from all the platforms that are available. So those are the three key main advices that I can give to businesses, and we'd be happy to support them and listen to them and work with them through the journey. Thank you.
Thank you very much. That is Isaac Shiyundu, Senior Associate Corporate Finance, Raising Capital. Over to you, Stephanie, your parting shot to the entrepreneurs.
Great, thank you. So to add on what Isaac has shared, so it's important as an entrepreneur to know where you are at as a business and where you are going. That clarity is very important because it also speaks to the kind of funding needs that you have as a business. And so have that understanding. Sometimes the question around, for those of us who have been employed, you have had the question around where do you see yourself in 5 years? So if you're looking for funding today to take care of your business to grow in the next 5 or 10 years, that understanding is very important. Sometimes I ask that question and it's not very clear what the growth plan is. So know where you are and where you're going. That also helps to align with the funding needs. Let's take time to understand the trends that there are in terms of the different types of funding. There was not much time to talk about that. I would like to share a little more about the different kind of trades and types of, funding innovations that are coming up in the market. So let's be aware of the trades because we may just be knowing the traditional kind of funding and the grants and all that, but there are also many other innovative ways that have come up in the market and we are seeing investors being able to come up with innovative ways to meet the needs of entrepreneurs. So what trades are there and which one really applies to your kind of business? Then third, prepare your business for funding or be investor ready. So this has to do with really taking that retrospective sort of thinking and looking into your business, what it is that the investors or the funders are keen on, and what are the gaps and what are the what are they keen on, and what is my business aligned to those kind of needs, and just being able to do a preview and analysis and working through those areas which could be potentially bottlenecks where you are not getting funding, of course, will increase your chances of being able to get funding. So we need to work on that, and again also the documentation which has to do with proper documents which can really tell, or the fundraising collateral, whether it's a pitch deck or whether it is the financial models and documents which are able to communicate your business story and where the business is going. These need to be also very well curated to be able to communicate very well what the business opportunity is. Then the fourth one is about identifying the ideal partners, because it is possible to be talking to the wrong partners, and that we get frustrated. So it's good to know the right match in terms of being that has to do with the business stage, the motivation of the funders, whether it's for profit or otherwise. You have heard about different series or whatever different funding stages, whether it is seed or series A or B or the like, and different funders are playing at different stages. The VCs are looking at A and above. The angel investors are looking at seed and pre-seed and the like. So you need to be able to know where your business is and where and the most ideal, and whether whoever you're speaking to is resonating with the kind of funding that you're looking for. The sector again also, are they looking at your sector, or are they looking at your sector or not? Because that also brings the alignment. And then lastly, you need to understand the investors' perspectives. That has to do with the goals that you are setting as a business and whether they are aligning to your business as well. You have to understand, other aspects around the exit strategies. There's what happens once the funding, period is over. Have you thought about that? So that has to do with just part of the funding, preparation and information that we need to know, just so that it is very clear to us when we have these conversations. We are very clear how the investor is gonna be. Both parties are well taken care of. So in a nutshell, let's be prepared. Let's take time to get this information, understand what is happening in the ecosystem, and let's build networks and relationships. A lot of times we find it has to do with, the networks that we are playing. Are we going to the right networks? Are we going to the conferences and all these events, and just being able to speak to the likes of Peter and, understanding what it is that they are really looking out for, and working through that, and not making the assumption, like we said, that because I'm running a business, I'm going to get funding. We need to align ourselves with those who are getting the funding, because there are expectations. Thank you.
Thank you very much, Stephanie Nguku, CEO and founder, Upscale Consulting, and also a Sandbox expert. Peter, what are your parting shots for the entrepreneurs?
Thanks. Yeah, so just a few quick things. I think one thing is, be realistic and count the cost. We've talked about philanthropic capital, but also the variety of other type of capital sources. And then inside of that, like, it's not a sprint, right? Do you know what I mean? It's like, I feel like everyone's in a race trying to make it quick, especially this generation at the moment. It's like how to get rich quick and how to build something really fast and how to grow 2,000%. But just focus on building a long, stable, generational business, right? And so just really trying to, as you are setting out on your fundraising journey, don't get tired, keep going. As Stephanie just mentioned, focus on relationships. Like, ask your friends, ask for introductions, be very clear to articulate what do you need and why. And so really just be asking your friends for feedback, ask for your customers for feedback. Even yesterday, I was at an event, and one lady talked, she went on a fundraising journey, wasn't successful, but then ended up one of her suppliers was her first investor. And the supplier invested in the business. So just like, don't be shy, ask people questions, help people really know. Like, even some of my friends here in Nairobi, it's just like, here, be very clear. Let me know what you need so that I can advocate for you. And so just when you're thinking of your network, the relationships you have, be very clear to be confident, but also to make sure that your networks, your friends, your relationships, your relational capital, they know exactly what you need, so that then you'll be able to get to the right person or the right contact or the right investor. But the other is just also being realistic with your time as well, right? Like, let's say for us, for KUA, on our website, we're very clear, this is our criteria, but you'd be shocked of how many people will apply for funding and then wonder, okay, why was I not successful? And it's like, here, we've clearly written that we look for businesses with over 5 million shillings in revenue. And so if you're applying and you're not filling that criteria, I'm like, okay, are you reading through and being very clear to understand? Because that'll help, because that's where it's just like, you're not being realistic about where you're going to actually source capital. So you need to really kind of think through your business, find the right investor. And if the investor doesn't have their criteria, doesn't have their underwriting policies of what they're looking for, ask before you divert resources to pursue the capital. Find out exactly what their investment thesis, what their risk policies are, so that you don't waste your time. And then inside of that, just have a really strong 360 understanding of your business, right? And that's to a lot of people have mentioned, either get advisors, get consultants, or join accelerator programs, and really welcome feedback to get as much insight as possible. I think that's a kind of a key point. And then the other one is just offer your customers value. Don't always be competing for price, but really just focus on building the business. And sometimes that can be really assessing your pricing or really assessing what is your competitive advantage. Because I think Ruben or Isaac mentioned at the start, like capital does not solve all the problems. And it's not just if I had $1 million or if I had $100,000, everything was going to be okay. As you get bigger, the challenges will get bigger. The challenges will get harder. And trust me, we're seeing that with our portfolio. Is like they've doubled their revenue, they've tripled their revenue, but the magnitude of the challenges are getting bigger. And so you need to continue to be competitive and really assessing what you're doing. And you'll be ready for those challenges when you get there. But just be really realistic of just capital does not solve the problems. And so just be focused on building a solid business that's delivering value to your customers. And that's also what investors want to see. And so we really want to see how you're thinking that through. And then that's where capital can help fix some specific challenges from collecting receivables or cash flowing cycles. But it's not necessarily like a bigger equipment that can produce more products faster does not get you more customers. And so you still have to figure out the digital marketing and those market linkages. And so just really be focusing on fixing those problems earlier, because it's a lot harder to fix some of those strategic decisions later. And so, yeah, sorry, there's a lot, but yeah.
Thank you very much, Peter Fry there, co-founder and executive director, Kua Ventures. Ruben, what is your advice to these entrepreneurs as they seek capital?
Finally, I think the most important thing also as for including myself as an entrepreneur is identifying a unique value proposition in the market. Because once you operate just like anyone else, it will be very hard to get capital, it will be very hard to scale your business, and it will be very hard to operate. Identify what's one thing that your customers can know yourself, can know your business for. Is it service? Is it a unique product? I remember a couple of years back, we had banks that would identify a particular product. For instance, if you wanted asset finance, the bank to go to was NIC. So in terms of your business, what do you want your customers to identify you for? Because that will drive your business not just now, but also into the future. And it will help you also in terms of operation cost, in that customers will be talking more about you and the business services that you offer, as opposed to you spending so much on advertising and market. Yeah, I think learn and research about your markets really well, and who are the partners who are really interested in that particular space, so that in any event where you need to pitch or you need to tell your story, you can be in a position to be an authority in that particular area where you operate in. The other thing is that I know we are going through very turbulent moments. Don't give up. At times you'll make so many applications for capital and debt, and you'll feel like things are not working for you. In very turbulent economic times, don't give up. If anything, just show up and keep on trying. Something will come up. And also identify and also try and network as much as possible. Something will always come through for an entrepreneur as long as you have the spirit to continue fighting on and have the grit. And lastly, don't fear to take debt. I know some people tell you debt is bad. Don't take debt, but the only way you can scale your business, the only way you can catapult your business is through debt. But again, you must also have the integrity to pay it back and also to invest it in the business. Don't take debt and go buy land. Don't take debt and go for holiday. Don't use your business to take debt and then reinvest in something else. Take debt that has a positive impact to your business. Thank you.
Ruben Kimani, Managing Director, Edenbridge Capital. Thank you very much. Ladies and gentlemen, could we kindly give our panelists virtual claps of appreciation? Haven't you picked loads and loads of information? I hope you're learning. The conversation of money is not to be feared. The conversation of money is not to be pushed over. Learn to have confidence to say, this is what I have, this is what I can, and also have the grit to actually get into the business every single day and to receive feedback, because that is important to be able to grow your business. So we've just learned that financial capital does not come alone. We have learned that financial capital comes with intellectual capital. That means, do you know what your business is about? Yes, you have the greatest idea in the world. I guess we all do. We have about 120, and I don't know how many other business owners around the world. Yes, you do. But can you defend your business to the shilling or to the dollar or whatever currency that you're asking your business for? The other is social capital. Who do you know? Or better still, who knows you so that they can speak for you where money conversations is about? Because you know what, ladies and gentlemen, what they say about you when you're not there is a reason whether you'll get the business or not, is a reason where you'll get the money or not. So ladies and gentlemen, do not do business fraudulently. Be kind to your customers because they're your first point of advertising long before you go and invest finances, whether above or below the line or digital. Please make sure that you're doing business in the most ethical way. That by and large helps you get as much opportunities as possible to even come to the table and negotiate. So thank you very much for being engaging. We have come to the end with a few minutes to over the hour, but we truly appreciate. World International has been your host for this session, and we work with you as entrepreneurs. At early stage, into growth stage, we have Scalerizer as one of our programs to be able to help you clarify what's your business model about. What do you need to know as you are engaging in that business, as you are beginning to secure your market, as you are beginning to scale? What is it that you need to know about your business so that you know for sure at the point that you're either speaking to one, your customers, two, your suppliers, three, to the point that maybe you'll be looking for your business advisors or advisory board for that matter. You know what clarity about your strategy, your value proposition is about. Then we do have, when you begin to get what I like to call new problems, as you have been told, growth does come with new problems, and that is a sign of it. If you find that you're getting back to the same problems over and over again, then there is a problem with stagnation, which you need to introspect. So we have programs such as in medium-sized business department that we can offer complex solutions, whether it comes to, do you want to grow regionally? Are you seeking a merger and acquisition? Do you want to include in this conversation of what kind of equity or debt are you seeking, and what kind of partners do you want to go with so that you're able to have sustainable growth? We are here for you. Then when it comes to projects, we have various project teams, whether it's technical assistance, access to finance, or training. When you have big cohort kind of groups to be able to support you, depending on the kinds of funding or partner needs our partners have, we are there for you to be able to walk with you the journey. You know that adage by a certain football team: you never walk alone. Entrepreneurship, you never walk alone. Whatsoever is the challenge, you never walk alone. Thank you very much. We would like some feedback from you. Kindly do accord us that feedback. There'll be a QR code here to be able to hear from you, and even going forward, what kind of webinar series can we have for you? Because we have understood we are the ones who hold the business. Our businesses to success and be able to support our economies. Again, our panelists, asanteni sana. So what will be coming on the screen will be a QR code to be able to give us feedback. Thank you very much, and do have a good afternoon. And may I say, Happy New Month. I come from the place where I truly work with numbers. 8 means new beginnings. Can this be a new beginning of being able to thrive in your business financially? Thank you. There is a QR code. Kindly be able to give us a review of what this session has been.